Taiwan is seeing cuts of around 0.5%.
Expect to raise interest rates further to ensure the timely return of inflation to our 2% medium-term inflation target.
I'm only a little bit cautious because we're going to that 17,800, 17,850 and we're seeing a U-turn.
We also had some numbers that suggest that up ahead here, looking into the fourth quarter, we're going to see somewhat slower growth.
They have called this meeting to discuss with the MPC what they should put in that letter.
Nifty is very, very flat, up just about 17 odd points.
Market is obviously a confluence of factors that are affecting the market. Global factors have been very dominating.
For SBI Card, if you take a look from Q1 FY21 to Q2 FY23, the revolver rate has declined massively from 45% to 24%.
Tata Chemicals, what's happening is that margins expanded, but they were slightly lower than what the street was working with.
Now it's down, 62% from its post-listing high. And as we speak, it's a fresh low on this stock. It's down almost 14% from its IPO price of 11.25 as well.
All the global volatility, the market is trending higher.
China is not as great, but the US markets have been quite resilient.
The mid-cap index is down around 0.6%.
Okay, that was the day so far. What a day and what a week. Welcome to NSE Closing Bell. I'm Sonia Shenoy. With me is Nigel D'Souza and Mangalam Malu. The market, very similar to yesterday, has given up a lot of its gains, has found a hurdle or a resistance at that 17,800 mark. And the mid-caps are under a bit of pressure, so some amount of profit-taking is what we're seeing. The Bank Nifty as well hasn't really batted for the bulls today. In fact, if anything, the Bank Nifty has dragged the market lower. By the end of the week, you get a sense that nothing much has happened except that the Nifty has rallied about 1% this week and trending towards the higher end of that narrow trading range between 17,500 and 17,800. Good afternoon, folks. Hi, Nigel.
Well, hi, good afternoon, Sonia. Hi, Mangalam. We've got just an hour and then we're off for the weekend. So that's pretty good news, right? And in the last 1 hour, Sonia, I think
we are not off for the weekend, by the way. We have another show at 4:30.
We have editors
you forgot that.
So a little longer. But good to see Maruti delivered, a pretty good set of numbers. And that stock, in fact, is bucking the trend. It's moved to the high point of the day. So we'll talk about that in just, in further detail later on. It's blazing away, actually. And just one point, all through the week, it's we did the same thing, right? At around 2:30 p.m., we talked about us moving to around the 17,800, 17,850 odd mark. We're seeing resistance out there and a bit of a U-turn. The sense you get is maybe there's a bit of a wait and watch mode that we'll be going through for the next few days till the Fed meet. And then, in fact, maybe we either take a leg up or a leg down. So let's see how that goes. Mangalam, what else?
Well, what else? There has nothing been, in any directional move this time around. The only sector that stood out was the PSU Bank, which gained by almost 5% this week. If you just take a look at the Nifty, the mid-cap index, as well as the Nifty Bank, a few days, some of the indices outperformed, some of them underperformed. At the end of the day, we're going with almost 1% on, all these indices, the Nifty, the mid-cap index, as well as the Nifty Bank in terms of gains. So all null and void. This was a truncated week, which will end in an hour. And then we'll perhaps, look at all the cues that are taking place in the next week. Of course, we do have a couple of results like Nykaa, etc. But we'll most definitely be watching out for what takes place, abroad as against what takes place in India. Because November 1-2, we have the US FOMC meet. There will be the build-up to the midterm election on November 8th as well. That's the US midterm election. So up until then, all eyes will be tuned into what the global action is. But be that as it may, we are at the higher end of that range. For the Nifty Bank, however, despite the weakness that we are seeing today, supports are not in sight until 39,500, 39,600, where we have both the 20 as well as the 50-day moving averages. So let's see where we go from here. This time around, maybe the week can be accounted for as a festive week with just a 1% token gain for all the three frontline indices.
Oh, absolutely, Mangalam. And you were talking about all the things to watch out for next week. It's a pretty heavy week of earnings, next one. You have Bharti Airtel, Tata Steel, L&T, SBI. So a lot of large caps coming out with numbers. There's auto sales next week. So, and of course, you talked about the FOMC meeting on the 1st and 2nd of November. So no dearth of cues to watch out for. But let's tell you what's lined up in the next 1 hour. Key indices are off their day's highs to trade flat. The Nifty is above the 17,700 mark, but it's a down day for the banks. Broader markets are also under pressure. IT, pharma and metals are also in the red. Auto major Maruti just reported Q2 earnings a while back. The stock is seeing a surge after a good set of numbers. A detailed fine print of those numbers in just a bit. And some very optimistic commentary coming in from the management of Latent View Analytics. Excerpts from that chat in just moments from now. BEL is trading with losses despite a bullish Morgan Stanley note. We'll tell you more about that later on the show. And we'll also be joined by our Alpha Manager of the Day, Amit Gupta of ICICI Securities, PMS, to take the discussion forward on markets and sectors that you need to focus on.
How should you position yourself in the final hour of trade? Well, Mitesh Thakkar joins us to tell us exactly that. Hi, Mitesh. Good afternoon. I think on a day-to-day basis, if you took money off the table at the start, you'll be very happy because all through the day, we don't go and visit those highs. What's your sense at around the 17,750 odd? Would you look to buy the Nifty, or would you wait maybe to move towards 17,600 and then look to get it?
Good afternoon, Nigel. I think that's an eternal dilemma which a trader faces. Should I have taken money or not? But the answer mostly is correct, and it's 100% right only in the hindsight. So I wouldn't have known that. In fact, I was the only thing is that we had some pivot at 17,850, and I was waiting for a break above that to take fresh long positions. So that didn't happen. But otherwise, this is a market which is broadly consolidating, 17,650 to about 17,850. And now that you know that the broader trend is on the upside, either buy at the breakout or try to buy it closer to 17,650 is what we have maintained for the last 2-3 days. It's worked well, and taking profits closer to about 17,850 has also worked well. But I think I still remain positively biased until we start breaking below 17,500, 8,600 zones. I think the idea that 17,650 any declines to that level would be buying opportunity. So that's the way we approach the trading part of it. I have a buy on Apollo Hospitals right now. That's a stock which is given a good price and volume breakout today. Recommend a buy here with a stop below levels of 4,500 for targets of 4,680, 4,700 or thereabouts. And a stock which is broken down and is given a big red candle is Balrampur Chini, possibly indicating more profit booking and supply pressure over here. That's a sell with a stop at 320 for targets of 300.
All right, take that point, Mitesh. We'll just come back to you in a bit. We do have with us Dipen Mehta as well, director at Elixir Equities. Dipen, we'll talk to you about Maruti in a bit. Maruti is actually the stock which is the stock of the moment, up almost 3% the top Nifty gainer. But the other two Nifty gainers today have been Reliance as well as Apollo Hospitals. Mitesh just alluded to Apollo Hospitals as well. But for the frontline index, it's been a tug of war between all the other stocks, all the other sectors, and Reliance, which is actually keeping the Nifty in the green as we speak. You've liked Reliance in the past. You wanted to know, what they're going to do with their consumer-facing businesses. We got their numbers. The consumer-facing business is now doing 50%, more than 50% of their EBITDA. What does one do?
Yeah, Mangalam, good afternoon and thanks for having me on your show. I think by and large, we were quite happy with the Reliance numbers, and although the oil to chemical business was subdued, but that was more to do with the unusual and one-time nature of government taxes, which should eventually even out. And also, we're quite pleased with the management announcement to spin off and give free shares of Geo Finance. I think if that's the way going forward for the other businesses, then we may have a very good value unlocking opportunity in Reliance Industries. The key risk factor is a holding company discount coming through if the digital and the consumer-facing businesses, a pure play IPO is done and there's no benefit given to minority shareholders. But given all the kind of momentum which is there behind the earnings, we are quite positive on Reliance Industries. There are certain concerns around debt and low return on income and return on capital. But I think those will eventually get addressed by the management as the businesses start to scale up.
Okay, all right, Dipen, stay on with us. Sonia's going to take us for a ride. I mean, she's going to run us through the Maruti numbers she just came in. Sonia, looked pretty good, right? And the pending order book as well looked pretty good and explains why the stock is flying away.
Oh, absolutely. I mean, the stock is taking us for a ride for sure. A big drive over there, fast one, right? Strong earnings from Maruti. And I think the best part is that, of course, the revenue growth everyone knew about because these are wholesale numbers which are already declared by the company. And it's been very strong, a revenue growth of 46%. But the big positive has come in the margins. So the margins are now at a 7-quarter high of 9.25%, so almost 9.3%. That is a growth of over 500 basis points, compared to what we saw same time last year. But this is because raw material costs as a percentage of sales has fallen significantly. It's down 390 basis points year on year, raw material costs as a percentage of sales. And the company said that not just that, they've also undertaken some cost-cutting efforts, which has aided in their operational performance this time. There are big pending orders of over 4.1 lakh units currently, and it's the easing of the supply chain constraints as well as low channel inventory which has aided the wholesale for Maruti. Remember, there's a bar chart that will come up for you in terms of what the margin performance has been for Maruti. At 9.2%, this compares to 7.2% last quarter, 9.1% the quarter before. So it has come into that 9% range. But the last time it hit a 10% mark was way back in Q2 of FY21. So the big question is there more operating leverage which can help it get to that 10% level in the second half of the year? In fact, Dipan, we're still awaiting the management conference call, so we'll get more details then. But this is looking like a good set of numbers, and Maruti has many new launches as well. Do you think that, or rather, do you expect brokerages to scale up their earnings estimates and target prices post these earnings?
Absolutely, Sonia. I think I heard your call on the margins, and that's, I think, the big surprise over here. And raw material prices continue to kind of correct. And also the kind of proportion of revenues coming from new generation and UV vehicles, that also is earnings accretive. And one number we're looking out for is the actual realization per vehicle. I suspect that also has done exceedingly well in this quarter. And I think all the problems that Maruti and the auto industry has had over the past 3-4 years, right from semiconductor shortages, volatility in raw material prices, regulatory changes around emission standards, I think all of those are behind. And call it pent-up demand, call it underlying momentum of the industry. We're going to see very good numbers from the entire sector and Maruti in particular. And maybe the EV threat is one thing which we need to keep on monitoring. But I think next 2-3 years looks very exciting for the auto sector and Maruti in particular.
All right, we take your point. Dipen, we'd like you to hear what Vahista has to say on BEL today, and then we'll take your views on BEL as well. Vahista, take it away.
Hi, Mangalam. Thanks for that. Well, Bharat Electronics had reported their numbers yesterday, and they're more or less in line with the estimates. Their revenues were up 8% on year-on-year basis, which was driven by a pickup in the execution pace and the revenue spill over from Q4 of FY22 to FY23. The EBITDA margins were also healthy at 22%, which is more or less in line with what the management had guided us earlier. Now, Morgan Stanley had released a report on Bharat Electronics with an overweight rating and a target price of 124 rupees, wherein they say that BEL has signed several MOUs at the recently held Defence Expo, and the company has received a letter of intent of 8,100 crores from Triton for the lithium-ion battery packs, whose first batch will be delivered next month and is to be executed over the next 24 months, starting from January 2023. Now, for the company, the order book position is also quite robust at 52,700 crores, but which was down 5% on a quarter-on-quarter basis and down 3% on a year-on-year basis. But we need to understand the defense companies usually have a lumpy order book, and it's usually better towards the second half of the ongoing financial year. The order inflows for Q2 came in at 1,360 crores, which means that in order to meet the target of 20,000 crores, in the second half of the ongoing financial year, the order inflows have to grow by 39% on a year-on-year basis. The company has already had a strong run-up in the stock price in this year, which is up nearly 50% and is one of the strong plays in the defense indigenization theme.
All right, Vahista, thanks a lot for that. So that's about BEL, a big mover in this year itself, up almost, 52%. Giving it company today are actually Mazgaon Dock Shipbuilders, and we've seen some move come by on Railtel as well. Railtel is the one which is sitting with a gain of almost 3%. Dipen, your thoughts on BEL and the likes, and also view on Apollo Hospital, which is gaining after a very long time today.
Mangalam, positive on both the segments. Actually, hospital industry led by Apollo, as well as all the defense stocks. When it comes to defense, I think we are seeing exceptional visibility as far as earnings are concerned because of budging order book position and the entire trend of being Atmanirbhar as far as defense production is concerned. I think that augurs very well for PSU defense companies, and many marquee investors and fund managers have got onto this bandwagon. So we are quite positive, and actually days like this when these stocks like BEL and others are correcting are good opportunities if you do not have adequate exposure to defense stocks, which I think are in a secular growth momentum. And hospitals also, I think, are pretty much getting back to normalcy. They had a torrid time because of COVID lockdowns and so on and so forth. But now I think the core business is doing exceptionally well. And Apollo Hospital in particular, I think the digital initiatives is what everybody is tracking and what value is getting created over there. And as and when we see those businesses scale up, you will see the valuation of Apollo also move up in tandem. And when the industry is doing well, our preference is really for the market leader, which is Apollo Hospitals in this case. There's considerable scope for sweating the assets further and improving the capacity utilization at all its hospitals.
Okay, Dipan, stay on. We'll come back to you for more. For now, the market, the bank nifty is the one that's actually giving way this afternoon. So a lot of pressure. ICICI Bank is coming in for some profit taking. SBI as well comes out with numbers next week on the 5th. That's next Saturday. So ahead of that, SBI also in focus. On the other side, we'll be joined by our Alpha Manager of the Day, Amit Gupta of ICICI Securities PMS, to help us understand how to approach this market, and a lot of sectors and stocks in focus as well. Stay tuned.
Well, virtually unmoved actually. The Nifty, we're holding with those gains of close to around 20 points or thereabouts. By the way, keep an eye on a couple of smaller names from the broader markets that are moving higher. Tourism finance, after a while, that stock is up. Remember, it's been a rank underperformer. I recall there was a management change a few years ago, and there was an open offer around 130, 140 rupees, if I remember correctly, 150 rupees, I'm guessing. And from there, it did see quite a bit of selling, but that one, in fact, has popped up. By the way, Nykaa has come for a fresh round of selling, so that continues to remain under pressure, down close to around 6% as we speak. And from the F&O names, what a volatile trading session RBL Bank has had. Yesterday, there was a large trade. The stock was up 10%. Earlier today, it was down close to around 4%. Then it moved into the green. But that one, in fact, has come in for another round of selling as we speak. And Tata Motors DBR, the street is clearly sensing something. All dips are getting bought into on that one. And for this week itself, the stock has done pretty well. Tata Motors DBR, I think, is up close to around 19% in this week. Just pull up, week-to-date chart of Tata Motors, and maybe we can, club it with Tata Motors DVR as well. The DVR is doing a big outperformance. Plenty of rumors out there, but we'll have to wait to see whether or not there's something actually moving out there that's causing this big up move. That's Tata Motors DVR, and my director will pull up Tata Motors, for the last 1 week or so. Yes, last 1 week of both those two. It should come up at some point of time. Well, let's move on then. Latent View Analytics, well, that one's in focus. The company reported a good quarter. We did see the profitability jump up by more than 70%. Early today, we caught up with the company's Chief Executive Officer, Mr. Ranjan Seduraman, and he expects to exceed the run rate seen in the previous quarters and says they can look at substantial acquisitions in the time to come. Let's hear him out.
I think at this point in time, our run rate is already better than that number. So I wouldn't be, I would hope that we'll be able to maintain that trajectory, and we should be able to exceed that number. I'm not going to put out a guidance in terms of how much we will exceed that by, because of course, all of us are aware of some of the uncertainties in the macroeconomic scenario. But as I said earlier, going by conversations and deals in the pipeline at this time, I'm not worried about getting past that number at this time. If you take a look at the money that is available from the IPO plus our own cash reserves, we are almost sitting on about 1,000 crores, right, of capital. So while obviously we won't look to use all of it from an inorganic standpoint, the kitty that is available is much larger. And that is good news, because we can actually look at substantial opportunities, right, which can actually help us hit the ground running from a revenue as well as margin perspective. So that is the intention, meaning that can we achieve a step change while maintaining the growth and the margin trajectory. So that is the main criteria. We want stickiness. We want, especially we are keen on opportunities that will help us focus on our specific areas, Europe as a geography, PFSI and retail as industry segments, and data engineering and supply chain analytics, right, as horizontal. So these are the ones that we are focused on.
Well, Dipan, any view on this one? Management is sounding optimistic. Run rate will better from here on. They're talking about acquisitions as well. Any view on it?
Well, the only view is that it is quite expensive. But these are quality businesses, and they've always been expensive. Results have been better than our expectation. Data is the new oil in the digital economy, and this company is one of the important players over there. So let's keep an eye out for them. And maybe on corrections, stock specific, or when markets are correcting, one could look at getting into the stock. I think it's a great long-term story. It's just that the valuations are a bit mind-boggling at this point of time.
Right, and the other stock on our radar is Gokaldas Exports. While it posted a mixed set in a seasonally weak quarter, the revenue up 28%, the margins contracted to slightly around that 11.8% mark. We did speak with the management of the company, Shiv Ramakrishnan Ganapati, as well. And he spoke about the company's business prospects going forward. He too was rather optimistic about the way the company is shaping up for the future. Let's hear him out and then get Dipan's views on that.
Q3 is going to be a quarter to watch. Globally, there is a lot of things going on. There are headwinds in Europe, headwinds in US, and headwinds in China as well, where retail sales is not so great. We are building the capacity in anticipation of certain orders. Obviously, if the growth exceeds our expectation, we will not shy away from putting in more capacity.
Dipan, your thoughts on the entire textile space? I mean, we are seeing some names do extremely well in today's trading session. We have Jindal Worldwide, which is locked in a 20% upper circuit after a decline that we've seen from its highs. The other one is Gokaldas itself. They have a revenue target for 2,300 crores. But importantly, they say that, the big delta for them would be if any free trade agreement is signed with the UK. Are you waiting for any such event, or, you are positive or negative on this space?
See, generally, we should be a bit cautious on external-facing companies like Gokaldas Exports because of what's happening in the global economy. And clearly, they may face some demand challenges going ahead, which may not be perhaps evident in this quarter or next quarter numbers, but maybe 2-3 quarters down the line, you may see a slowdown in the revenues on that count. Underlying business fundamentals are good. 3 to 5 year type of prospects also are great because the world is trying to shift away from China and procure more and more of everything from India per se. So long-term trajectory is good. It's just that one needs to be a bit cautious in the short to medium term. And valuations are also not at throwaway levels or extremely attractive that it kind of prices in the risk of a demand slowdown because of consumption problems in the US and Europe.
Okay, Dipan, thanks a lot for joining in and all the best. Thanks. Have a great weekend as well. We'll see you again next week. So that's the word coming in on the markets. By the way, Nykaa is really getting hit hard. So 6% low on Nykaa. It's now halved this year, more than halved actually. And not just that, other platform companies not too far behind. Zomato is down 4%, delivery is down about 5%. You have PB Fintech that's been under pressure. So this whole lot has been taking it on the chin. Amit Gupta, who's the Vice President and Fund Manager at ICICI Securities PMS, joins us now to talk about that. Amit, before I ask you about your view on the markets, first of all, happy Diwali to you. Hope you have a great year ahead. What do you do with these platform companies that in any case have been under pressure and now there's this extra selling once the pre-IPO lock-in ends? What do you do here? Do you wait for these rates to stabilize at lower levels and look to buy, or do you stay away from this pack entirely?
So I think if you look at the mid-cap space, there are many opportunities available, where the valuations are better and where there is a better profitability, actually very, very visible profitability at least. But not in this case. I mean, whether you look at the Nykaa case or some other, the recently launched IPOs in the last 1 or 2 years. So they are coming below the IPO price now. So this is where I think whenever the lock-in period is getting over, people are exiting. This is what we have seen in the case of Zomato also, people were exiting. So my sense is look somewhere at least where there is a very clear visibility when the valuations also in the market are lower for the mid caps relatively. So even if you look at the technology space overall, I think the large cap IT has come down to better levels now, but mid cap IT is still costly. It is around 31, 32 times valuations. In fact, some of the ER&D companies in the market which were holding firm like Tata Elxsi and all, we have seen they are also coming off. So my sense is market is aligning the mid-cap piece of technologies now at a lower level. I think there may be some more correction possible there. This is where better be away and look at more large caps in that particular segment now.
Okay, hi Amit. So you're sticking with the large caps in IT, mid caps, as you say, they're still relatively expensive. In the banking names, it's reverse, right? The larger cap banks, they're getting a higher multiple, but the mid-sized tier 2 PSU banks, they're at a discount. In your fund, I see that you have the large names, SBI, ICICI Bank, HDFC Bank. You're not going for any of the smaller ones?
So smaller ones, sometimes, yes, definitely you can find an idea. But I tell you the problem going forward. If you look at the loan to deposit ratio in the banks right now, it is somewhere close to 75-80. That means for more credit growth to be, to get money, so you need to have more deposit rates now. So that is where actually they are looking for to raise money or to get more deposits going forward. Borrowing cost, if they borrow at a higher rate, that will shrink your already now. This is the expanded period of NIMs. We understand this. That is why the banks are reverting back. But going forward, when NIMs slowly will start getting contracted because of this, I think the larger banks will again come into focus, because there is always a possibility, of valuations getting challenged because of the lower margins in smaller banks. Currently, the positive with the banking system is they are sitting at the lower NPAs. So we have already seen at a base of 128 lakh crores, you have 6.5% of NPAs only in the banking system. The credit deposit, if you look at the provisioning coverage ratio, it is also higher, and ROAs, the return on asset I am seeing has improved. So for example, Axis Bank is there being part of our portfolios. We have seen it is almost hitting the much awaited 1.8% of ROAs and 18.5% of ROE. So it is not like the large cap banking is may lose shine going forward. I think they will be much in control, and Axis Bank, this is one of the cheapest private large cap bank. I think it is just reverting now after being laggard for quite some time. So they can always see the money flow coming in going forward.
Right, take that point. Just keep an eye out on Maruti. It's extending its gains, and how very close to its 52-week high now on Maruti. Just about 10-12 rupees away. 94.40 on the stock. The 52-week high is a little over 94.50, and it's surging. Margins strong. We had pending orders which were extremely strong for Maruti as well. I look at your top holdings, Amit, and I see one auto stock, which is M&M. Wonder why you don't have Maruti there, and after these numbers, would you take a look at this space?
So yes, I would say yes, because see, we took Mahindra previously because out of the total passenger vehicles, we had an idea that SUV is going to expand. In the starting of 2021, it was hardly 20% SUV in the overall PV segment, but now you see it is around 50%. And this is where Maruti became a laggard and M&M took the front seat. So along with this, whether you look at the growth in the three-wheeler segment in Mahindra, or you look at the tractor space, which is now coming up again, and you look at the commercial vehicle space. So these were definitely the positives going with Mahindra along with the EV traction. But when you talk about Maruti now, see, Maruti is being bought by a lot of rural areas, villages. It is more expanded thing actually in the Indian markets. And now one of the positives, what I am observing is that the Rabi crop is going to be very good, because the reservoir levels in India are almost hitting 90%. You look at the last 10-year average of reservoirs in India, it is somewhere around 77-76%. This time it is hitting 90%. So if that Rabi crop goes good, eventually the more traction is going to come from the rural area also, and that is where I think Maruti, which is also going into hybrid cars, can start getting some traction. So Mahindra remains the top pick, no doubt. It is part of our portfolio and will remain there. But Maruti definitely, I think going forward, looking at the current valuations and looking at some kind of EPS tailwind which can come, I think we can definitely look at this one.
All right. Well, Amit, thanks a lot for joining in and have a good day. Well, that's Amit Gupta. But let's do one thing. Let's take a short commercial break. And as always, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter. We'll also get you some buy today, sell tomorrow calls from our technical experts. Stay tuned.
Welcome back. What Maruti has done is that it's taken the Nifty high by a few points, some 5-6 points contributed by Maruti itself. The others coming in from Reliance, which is at the high point of trade. But otherwise, the Nifty bank is still sitting with a cut of around 350 odd points. It's the tug of war that continues, even though the Nifty is with a mild positive bias. But joining me now, as always, at this time of the day is Nimesh. Nimesh, what are the dealers talking about in today's trading session?
Hi, Mangalam. So, we're starting the series on a bit of a soft note, but the good point is that there is a bit of leadership now from some large cap names. So, Reliance is batting for the bulls, Maruti is now batting for the bulls. So, that's playing out, but largely, market hour of days high, tracked by the financials. That index is down 1% in today's trade. There is a bit of selling or a bit of profit booking as well in the financial names. But one sector which is well bid today within the FIs is the PSU basket. The entire PSU basket is well bid for the last many days now. And every now and then you're seeing some of these outperformance here. Right. 2 days back there was NHPC and SJVN which rallied pretty hard. Last week there was BHL which has rallied very hard, and now we are seeing the PSU baskets like NTPC and all doing very good in trade today. So that's where it's a sweet spot, so to speak, where there is a bit of chasing as well from the larger institutions. So that's where some bit of flows are. I understand there's going to be a small market at close basket buying at a leading FI desk. Difficult to quantify the size, but there's going to be a small basket buying. That was the indication. So that's something to watch out in the last 30 minutes of trade. And I guess from a technical point of view, I guess the big move on the upside can only happen above 17,800. So that's acting as a very strong resistance on the Nifty. If that's taken out, you'll see a book up move in the November series. But till then, you're going to be in that range. And in today's trade specifically, while the flows are mixed, there is aggressive buying and well bid at the PSU basket.
Take your point, 17,800 has been a bit of a resistance, and the PSE index itself has been among the top performing indices this week. Individual stocks, so what do you have for us?
Okay, so in terms of individual names, the first stock on my radar is Tata Motor DVR. I heard even Nigel talking about it and showing the difference between the Tata Motor and the Tata Motor DVR. The discount has shrunk in the last few weeks, so to speak. In fact, in the last 10 days, the stock is up 20-odd%. And there is an anticipation in the market that maybe there is going to be some corporate development with regards to higher preference in terms of voting rights for DVR, and hence you're seeing a big up move in that stock. Even in terms of delivery, it's well marked for the last many days. So that's first stock, Tata Motor DVR. Then there are a couple of stocks which are purely buzzing or not falling much on back of buying support. Those are City Union Bank and SJVN. We highlighted the CLSA note as well yesterday, and there is consistent buying in both these stocks of late at the larger FI desk. So there is delivery-based buying in City Union Bank and SJVN today. So those are the couple of stocks. And the last stock is Aurobindo Pharma. Within the pharma pack, that stock is slightly under pressure today, purely on back of self-loss. So the delivery volumes are going to be high in Aurobindo Pharma, and looks like one of the large FIs seems to be a seller, and it's a bit of underperformance on that particular stock.
All right, Nimesh, thanks a lot for that. With that, it's back to you in the studio.
Thanks a lot for that, Mangalam. By the way, from the broader market, just want to point out a couple of stocks. The smart meter ordering is gaining traction, and a couple of the stocks are buzzing today. HPL Electric, the stock is up close to 7% today. For this month, it's up close to around 40%. Those are the notable names in the listed space that make HPL Electric. That's the one that we're talking about. It's up close to around 40% this month itself. And for this week, it's up close to around 15 to around 16%. So that's one stock. The other one, I think, which has a bigger capacity is Genius Power. So the smart metering tendering, that's gaining traction in various states in India. And there are some ambitious targets as well that have come about. So it seems these stocks are excited on the back of that. Let's see whether or not something comes out. Remember, in the past, the street has been most concerned about the receivables position on this. So if there is tendering, we'll have to track that. And then the payment terms as well is something that we'll have to keep an eye on. HPL Electric, that one has gained even more than Genius Power if you pull up the last 1 month chart. But getting back to the markets, well, Mitesh, what do? 17,770. Pack your bags, book your profits if you are sitting on some gains and enjoy the weekend, or carry the long position into the weekend.
My sense is that I think, basically on the index, you want to wait it out, see if today's high is being cleared and then take a long. But otherwise on the stock side, we're trading with more long bias, though right now I have one buy and one sell call. Bosch is something, which has reversed after a good decline and then a consolidation. So that's most likely heading out with the indicators now clearly pointing northwards. There's a BTST with a stop below 15,980 for targets of 16,400. And Balrampur Chini is clearly one, which is slightly looking on the negative side, negative candlestick pattern, good volume on the downside. So this could see follow through. That's a STBT with a stop at 314 for targets of 302.
Okay, by the way, Maruti is now up almost 5%. And remember, it's already gained so much this year. Maruti is up almost 27-28% this year already. But the numbers have been so strong that the stock is just zooming away. So don't lose sight of that. But overall, I mean, there's lots happening in terms of earnings. So good numbers from Maruti, but we're awaiting Dr. Reddy's numbers, which will be out anytime soon. Ekta is here with the key expectations. Ekta, over to you.
Well, yes, for Dr. Reddy's this quarter, we are expecting an absolutely flat performance in terms of the revenues. Maybe the margins could decline. Now, in terms of the key geographies, what we would be watching out for is basically the US business performance. While the base business could be impacted because of pricing pressure, the street is going to watch what the impact of Revlimid generic would be on the overall performance of the company this time round. Remember that they did launch two of the strengths of Revlimid generic with exclusivity in the US markets. So that should probably benefit them in this quarter. Now, in terms of other geographies, India could probably see a scale up on a Q-on-Q basis. 7 to 8% is what some street estimates are. Remember that they have a strong India portfolio. So how they expect the guidance in terms of India going forward would be something that would be keenly watched as well. Russia, CIS would be possibly a volatile market and is probably one of the reasons where the numbers will get impacted this quarter. While the company has been confident in the past about Russia, there could be some amount of volatility. Remember that Dr. Reddy's is one of the largest exporters from India to Russia when it comes to drugs, and hence it would be an important market to track as well. Margins, like I mentioned, there could be some amount of deceleration in the margin simply because of a high base. They did have some amount of licensing income same time last quarter, and commentary on the US business as well as maybe the US FDA inspections or upcoming inspections is something that the conference call would probably throw up.
Okay, all right. By the way, just pull up the intraday chart of Satin Credit. It's come out with its set of numbers, and as the numbers hit the exchange itself, the stock is perked up. You know, the profitability is looking much better, but we'll have to see the finer details on this one. For the time being, big volume spike is what we saw on that one. Just take a look at it. A big green bar out there. The profit numbers, well, that looks better, but I think we'll have to have a closer look at the asset quality and what the NIMs were for the past quarter. It seems the street is a little bit excited on that one. For the time being, let's talk about Bandhan Bank. Abhishek is standing by to run us through the key expectations. Abhishek?
Well, to begin with, Nigel, they have already given the business update, which is not a very great one. The book has remained flat for H1 FY23 when compared to FY22 numbers. There is no significant improvement in collections in Q2. As of September, collections were at 97% when compared to 96% that we saw in June. Deposit momentum was strong, about 21.3% YOY and about 6.8% sequentially. However, there has been massive decline in CASA ratio by almost 240 basis points on a sequential basis. So retail deposit share has also shrunk a lot. It's come down to 74.1% when compared to 79.3% on a sequential basis. So it looks like, either bulk deposits or high cost deposits must have come through in Q2, which would impact the overall margins. So the key things to watch will be the factor that, net interest margin can decline YOY and quarter-on-quarter. The slippages and write-offs will remain elevated in this quarter. The management had been guiding the analyst community that, they will see a huge write-off in this quarter. So asset quality can deteriorate, and outlook on recovery from NPAs and the loan growth going ahead will be seen closely. Our polls suggest NII growth of 25% on a YOY basis, but down about 3.6% sequentially. We are working with a profit number of close to 750 crore, which is down about 15.5% on a sequential basis. Back to you.
Okay, well, those are Satin Credit Care's numbers. Good growth coming in on the profitability. Net profits at about 57.2 crores versus 10.9 crores year on year. And the stock as well is reacting to it, up almost about 4% right now. Just come off a little bit from the top. So good performance over there. But Neeraj Diwan, Director at Quantum Securities, is joining us now to give us his view on the markets and the way things could progress. Neeraj, happy Diwali to you. Thanks for being with us on the channel. The biggest gainer as we speak is Maruti. It's not only the biggest Nifty gainer, but it's a huge mover this year, up almost 30%. Is the risk reward still favorable for stocks like Maruti?
Yeah, good afternoon. Thank you, and wishing you and all the viewers also a very happy Diwali. Yeah, actually, of course, the way auto stocks have moved up, I think now after the run-up that you've seen in Maruti, adding today's 5% move also, even if you take it to pre-COVID, EPS of 250, 260, which Maruti used to do, the stock is now not that cheap, what it used to be earlier. But now after the run-up, I think it's become fairly priced. So I think risk reward for people who are buying now may not be that great. I think if you have to enter Maruti, either if you have to make some money in automobile stock, maybe look for auto ancillaries, or maybe look at some other stock where maybe risk reward is better than what I see in Maruti. Do I still feel that the momentum will continue, and the kind of outstanding booking that they have, even top line will continue. The margin improvement was definitely a surprise this time, so some more margin improvement can happen. But taking all that also into account, I think valuation wise now, I think it's fairly valued.
All right, we take that point. Neeraj, just keep an eye out on a couple of these stocks. PB Fintech has seen a massive rally from the lows, up, 7%. It was in the red for most part of today's trading session and now has moved to the high point. It's a vertical spike that we're seeing on PB Fintech. Remember, it listed about 5 days after Nykaa's listing. So understandably, the anchor, the pre-IPO investor lock-in for PB Fintech also opens about 4 or 5 days after Nykaa's November 8, November 9 lock-in opening. So there is fear of supply. The stock has been an underperformer, down 60% this year, down almost 70% from its highs, but seeing some bit of a pickup at lower levels. Neeraj, you said that, for stocks like Maruti, etc., the upside would be limited given the rally they've already seen from the lows. What about these platform companies? They've fallen a fair bit from the highs. For those who had missed it during the IPO and now are looking at it at below IPO prices, do you think there is still an opportunity here to perhaps get into or maybe stay away?
I think it will be very stock specific, but like you mentioned about PV, I think there is no case right now also to look for buying in opportunity into this, because we don't see any fundamental reason or any profitability that you're going to see from these companies very soon. So I think I'll still avoid stock specific. There will be opportunities. There will be other companies, the new age companies which have also corrected. They may look better, but PV Fintech specifically, I don't see any opportunity to buy right now. I think better you should avoid.
All right. Hi Neeraj, I wanted to just ask you about a couple of these stocks in the broader markets that are buzzing around. I'm not sure whether you track them, but there are these smart meter companies, Genispa, HPL Electric. We know that the central government has been talking a lot about it, and state governments have started ordering. I ask you about these companies because they are spiking up big time in the last 1 month or so and gaining traction. Do you track any of them, Genispa or HPL Electric?
Yeah, I'll not be specifically able to comment on the valuation, but definitely I've looked at these companies. HPL I've looked at basically. I think it's a good company, a decent management. I think there was a problem with the payments earlier from the state governments, the orders which used to get earlier. But now I think post-COVID, the orders are really coming in a big way, and execution is also picking up. I think even after the run-up that we see now, if I remember, HPL IPO must have come close to 160, 180 or therearound. So still it is much below the IPO price, and with things returning faster at pre-COVID levels, I think it's still an opportunity. So one should be looking at these companies.
Okay, all right, got that, Neeraj. There's a big opportunity. Let's see whether or not it plays out. That's Neeraj's view, and HPL Electric is something that he tracks as well. Well, we'll slip into a short break. As we do that, let's hear out some opinion coming in from Ed Yardini of Yardini Research. He joined us today. He gave us a sense of what he expects from the Federal Reserve and also his view on the global markets.
I don't know that the Fed is going to change its mind based on the GDP numbers, but we also had some numbers that suggest that up ahead here, looking into the fourth quarter, we're going to see somewhat slower growth, but also see somewhat lower inflation. Inflation is really what this is all about. And I think the Federal Reserve is committed to 75 basis points at the November meeting. I think they're going to go for 75 basis points at the December meeting, but soften that up by indicating that they are going to pause in the first half of the year. And I think that's what the market is getting excited about, is that we're getting closer to the end of the tightening phase. We're at least getting closer to a pause, let's put it that way. I think when I look around the world, I think when investors look around the world, they just see a tremendous amount of risk with what's going on in Europe, with the war, with what is going on with China becoming more autocratic and less friendly to businesses. So when global investors are looking for safe havens around the world, clearly the U.S. has been one of them, and we've seen that in the strong dollar. But another one in emerging markets has been India, and we've seen that in the India stock market.
The Nifty is just about getting closer to that 17,800 mark as we get closer to the weekend, and that is courtesy to stocks. Reliance, and increasingly in the latter half of trade, post their earnings, Maruti. Maruti is the top owners on the Nifty right now with a gain of almost 5% odd. Apollo Hospitals is the third one, but does not have as much weight. And we've seen some recovery from the lows on Nifty. Bank as well. When we started the show, was down by almost 1%, and now it's down by just about 0.75%. So some recovery is seen there, and that's aiding the cause of the frontline index as well. Earlier today, we spoke with Prashant Khemka of White Oak Capital Management. Let's hear out what he had to say about the way he feels about the market and the impact that inflation is having on India and other countries in the world.
Market is obviously a confluence of factors that are affecting the market. Global factors have been very dominating this year, particularly due to the sustained higher level of inflation, which has caused, on one side, central bankers to hike rates around the world, and B, also caused some slowdown in consumption and worries about slowdown in corporate profits going forward. So as a combination, if you see, the markets in India have been flattish because the issues have not impacted, this time around, issues have not impacted India as acutely. Because inflation in India at about 7-8%, it's not outside the range of what we are used to. The government sector PSU banks have done quite a lot better, and maybe even over the last couple of years, they've done quite well. It is, in our view, impossible to keep switching between such large segments of the market, say private sector versus public sector and so on. So the over longer time period, if you see 10, 20-year time periods, private sector has continued to gain market share. They've had much better performance in terms of credit quality as well as asset growth. So growth as well as profitability has been far superior. And these are long-dated business models. The pendulum can swing farther away from the center on either side. Now, and we won't know how far, whether we are even, which side of the center we are. We won't even know. Only in hindsight we would know. So last year, I think pendulum swung with the benefit of hindsight on one extreme, and it could be that we are at the other side of the center already, but very hard to say. There are some obviously technical factors as well right now at play with all the lock-ins that are expiring. So anyone who wants to buy would not be keen to step in and buy today and would rather wait for the lock-ins to expire.
All right. Well, by the way, we had Bandhan Bank's numbers that are flashing on the screen. The net profit number has missed estimates by a large margin. That's because the provisions are much, much higher. Not just that, even if you look at the NIMs, they have come down a little bit. From around 8%, it's come down to around 7% odd. The asset quality is more or less stable. The gross NPA is, on a sequential basis, more or less stable at around 7.2%, 7.2 versus 7.25% odd. That's par for the course. Even the net NPA as well, they've come down very marginally, 1.86%. That compares with around 1.92% odd. The problem is they've provided more. Why is that? We'll require some details out there. And clearly the margins at around the NIMs at around 8%. It wasn't expected to hold out there, but there's already seen a bit of a slippy slide down to around 7%. Neeraj Diwan is with us. Neeraj, just read out the basic numbers. The street doesn't appear to like it too much. The stock is down 2.5%. Your view on the stock?
Yeah, whatever numbers I just saw also flashing on the screen, the business parameters are not improving at all. The main thing is the net interest income is not improving. profits are missing estimates because of the asset quality, the pressure of because of the provisions. I think so because this kind of numbers are coming in a scenario where PSU banks are coming out with very good set of numbers. Some of the private sector banks like Karur, Federal Bank also come out with brilliant set of numbers. So I don't think there's any case for someone to look at Bandhan Bank. Where still, they're struggling. Even their collection efficiencies, where people are coming back to 100%, they're still at 98%. So you are not seeing any major improvement. Though, one thing is there that the asset quality is stable now. We haven't seen deterioration as far as the NPAs are concerned. But then again, if someone has a choice, then why will you look at Bandhan? The only thing would be that because the stock has corrected so much, maybe after the results, maybe this is the worst number that are there and may see some improvement going forward. But I think it will still struggle around these levels.
All right, the stock is meandering around these levels itself. There was an initial dip on the stock, and now it's stabilizing with a cut of almost 2% and a large part of Bandhan Bank's basic details were already given in their second quarter update. So we'll just try and get in some more details on the counter. But on the other side, we are seeing a big move on a couple of these other financiers. Shriram Transport, for instance, has now surged to the high point of trade. It's spiking with decent volumes behind it as well. And the other one from the FMCG pack is Marico. It's going to report its numbers in the next couple of weeks. It was in the red for most part of today's trading session, but has recovered from the lows and now just about moved into the green from the lows. That's about Marico. We have the Marico update with us as well for their second quarter. Do you like any of these names, Neeraj? Shriram as well as Marico?
I like Shriram Transport Finance because even at the current price, it is available at 1.2 price to adjusted book value based on FY24. And with the merger that is happening with Shriram City Union, I think their parameters will improve further, the ROAs will improve further. So I think even in spite of the bandwidth of the management being because of the merger being occupied, still they've seen a good 11% growth in their AUM, and they've seen a 13% improvement in the used vehicle finance, which is a major business. So with the kind of improvement happening in infrastructure, capital good, capex, and with the improvement in the capital growth, I think Shriram Transport at this price is also very, 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 very attractively priced.
Okay, all right. Neeraj, we'll leave it at that. Thanks so much for giving us your view. You like Shriram Transport. That's the final one that you told us. Wishing you a good evening and a fantastic weekend ahead as well. Well, before we wind down, Mitesh is with us. Mitesh, one final word. I want on the Nifty Bank actually. Though it was under pressure, it seems there is some kind of bottom fishing. One would have thought that we would have hit fresh all-time highs. But the Nifty Bank is saying, if we'll have to wait for a little bit longer to hit that 41,800 odd mark. What's your view at around 41,000?
Nigel, I think, the Nifty Bank also, if you look at the last few months of movement, last few weeks of movement, we've had a closing of 41,400 on the 14th of September and then 41,460 on the 20th of September. And this time we got a high of around 41,530. So I think this 41,450, 550 zone, I think once that is cleared, then you will see a very strong rally happening in the bank. If you otherwise just wait it out, you will get a pullback and possibly a buying opportunity closer to 40,500, 400 zones.
Okay, all right. Thanks a lot, Mitesh. Wishing you a good weekend ahead, and we'll touch base with you on Monday morning. Well, time to start winding down the markets then. It was a decent trading session. The Nifty ends close to around the 17,800 odd mark. Well, that's the level from where we started today's trade itself. The ones that really gained in today's trading session, the reason the Nifty ended in the green was because Reliance Industries, the big boy in there, contributed big time, was up close to around 3%. Maruti, solid set of numbers coming in there. The street likes it, was up close to around 5.5%. Apollo Hospitals as well returned to the buy list, and some of those so-called boring PSUs that have some dividend yield, like Coal India as well as NTPC, both of them did pretty well. On the flip side, Tech Mahindra did come in for some selling. You had Tata Steel after yesterday's good run. Well, it did see some selling. Grasim as well was down close to 2.5%. And Divi's Laboratory as well seems to have lost its way. The problem pocket today was the banking names. And that's explained by ICICI Bank ended in the red. Axis Bank ended in the red as well in today's trading session. But Mangalam, mid-caps, well, the index ended under pressure. But there were plenty of stocks that were moving around, isn't it?
There were plenty of stocks that were moving around, Nigel, but the index ended almost 0.6% lower. We had more stocks moving down than moving up, almost 1,700 stocks in the red for about 1,100 in the green. But the ones that stood out on the downside were a couple of them which had result reactions for it. SBI Cards was lower, Tata Chemicals was down by almost 5%. We did see some weakness come by for Crompton as well. Balrampur Chini had some of its sweetness taken away in today's trading session, down almost 6.5%. And then we had a set of these platform companies which continue to see some selling ahead of fears of some more supply coming in. Case in point, something like a Nykaa, and we saw a decline in delivery as well, down almost 4%. One stock that bucked that trend from the platform space in the second half of trade was PB Fintech, which recovered from lows and is going home with a fair amount of gains on that counter. And as far as the other gainers in the mid-cap end of things are concerned, we did see some gains come by for a bunch of names. We did see some gains come by for PFC, REC, all the PSU names. Oil India doing well in the F&O space. Cummins, Honeywell were the ones that ended with a gain of almost 3.5% as well. We did see some gains come by for a couple of these smart meter names like HPL Electric as well as Genus Power too. But by and large, it was a down day for the mid-cap index. And for the frontliners, we did see the Nifty manage to close by about 1/3% in the green, despite the Nifty Bank closing lower by 2/3%. The Nifty was supported by both Reliance as well as Maruti. With that, we're out of time on this edition of Closing Bell. We wrap up this week and this day's trading session as well. But you don't go anywhere because it's our Friday special, Smart Money. Sonia has moved to the other studio to discuss opportunities in the fixed income market. Stay tuned, take a break, come back and watch Smart Money.
Powered by